Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ZCZL Industrial Technology Group Company Limited Annual Report. The ZCZL Industrial Technology Group Company Limited offers a diverse range of businesses and services that cater to various industries globally. At its core, the company specializes in manufacturing and selling coal mining equipment, including hydraulic supports and scrapers. This expertise is not limited to domestic markets, as the company also operates internationally. In addition to its primary focus on coal mining equipment, ZCZL Industrial Technology Group Company Limited also provides car parts for sale. This indicates a diversification of services that extends beyond the mining industry, allowing the company to tap into other lucrative markets. With a rich history dating back to 1958 and a presence in key locations such as Zhengzhou, China, and Germany, ZCZL Industrial Technology Group Company Limited has established itself as a significant player in its respective fields. The company's extensive reach and diverse offerings make it an attractive partner for various industries seeking reliable equipment and services. Its commitment to innovation and expansion is evident through its name change in 2025, signaling a forward-thinking approach that aligns with the evolving needs of global markets. ZCZL Industrial Technology Group Company Limited maintains a market capitalization of $42 billion, broadly in line with the industry peer group. ZCZL Industrial Technology Group Company Limited trades at a lower price-to-earnings ratio of 6 times and a higher price-to-book ratio of 1.2 times relative within the industry. While the stock does not screen as absolutely cheap, mixed valuation signals relative to industry peers prevent a definitive conclusion. With the broader industry trading at lower valuation levels, this may reflect transitional pricing dynamics rather than clear mispricing, warranting further analysis of earnings quality, growth sustainability, and balance sheet strength. The leverage on the balance sheet appears elevated, with liabilities of 51% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Average liabilities have increased consistently as the company expands. Importantly, both assets and shareholder equity have grown at least 20% faster than liabilities, indicating that the business is expanding substantially and generating value after covering its obligations. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 6.77%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified through a review of the company's financial performance. On the positive side, several factors contributed to revenue growth. The sales of auto parts increased by 13.6% from 2024 to 2025, while the manufacture of coal mining machinery saw a significant rise in revenue, with an increase of 11.3% and RM 1,649.12 million respectively. The company's digital transformation, innovation, and product differentiation also played a crucial role in driving growth. The coal mining machinery segment's complete set intelligence and internationalization strategy led to new breakthroughs in the international market. Additionally, the auto parts segment experienced strong growth momentum in international business, particularly in Europe. On the other hand, revenue decline was observed in the steel and other materials trading segment, which decreased by 4.8% from 2024 to 2025. The lack of specific information on this segment suggests that it may be a less significant contributor to the company's overall revenue. In summary, the primary drivers of revenue growth were the sales of auto parts, manufacture of coal mining machinery, and the company's digital transformation and innovation efforts. In contrast, the decline in revenue was primarily attributed to the steel and other materials trading segment. The company's debt level and interest expenses have undergone significant changes from 2024 to 2025. In terms of debt level, the total non-current liabilities increased by RMB 168,826, 8.7%, over the 2-year period. This indicates a moderate growth in the company's long-term financial obligations. On the other hand, the interest expenses have decreased substantially. The overall interest expenses dropped from RMB 297,947 in 2024 to RMB 225,425 in 2025, representing a decline of 24.34%. Furthermore, the net interest expenses on bank borrowings also decreased from RMB 259,835 in 2024 to RMB 192,694 in 2025. The reduction in interest expenses is primarily attributed to a decrease in interests on bank borrowings, which has contributed significantly to the overall decline in finance costs. This trend suggests that the company has managed to optimize its financial obligations and reduce its reliance on expensive debt financing. The company's performance varied across different segments and regions in the given period. On a positive note, the manufacture of coal mining machinery and auto parts saw significant growth, with increases of plus 9.3% and plus 13.7%, respectively. The industrial intelligence products segment also performed well, with revenue more than doubling from RMB 2,189,929 to RMB 3,333,844. The domestic market and Central Asian market were other areas where the company excelled, with stable order values and increasing market share in intelligent mining systems. Furthermore, the coal mining machinery segment led global industry development under the ZMJ brand, solidifying its position as a leader in the field. However, not all segments fared well. Sales of hydraulic roof supports declined by -8.3%, while sales of other coal mining equipment plummeted by -54.4%. The manufacture of auto parts also saw a decline in net profit, excluding unallocated expense, decreasing by 21.6% compared to the previous year. These areas will require attention and improvement strategies to get back on track. Management is emphasizing the company's focus on technological innovation, digital transformation, and institutional mechanism innovation. This strategic shift aims to solidify the foundation for high-quality development by deepening institutional and mechanism reform. The company plans to accelerate its digital and intelligent transformation to drive innovation and efficiency. This move is expected to unlock new opportunities for growth, particularly in the industrial intelligence segment, where a target scale of RMB 10 billion has been set. By prioritizing technological advancements and digitalization, management is signaling a commitment to staying ahead of the competition and driving long-term success. The company has a history of paying out dividends to its shareholders. This is evident from various sections in the report, including page 13, where specific amounts are mentioned as being recognized as distribution during the year. Furthermore, on page 34, it is explicitly stated that the company has paid dividends. Additionally, page 35 confirms this by stating that cash dividends will be paid to investors of H shares. This demonstrates a clear commitment to returning value to shareholders through dividend payments. The recent financial reports of a company have raised concerns about inventory buildup and supply chain disruption. A notable increase in cost of sales from RMB 4,064,709 between 2024 to 2025 suggests that the company may be struggling with managing its inventory levels. Furthermore, on page 27 of the report, it is mentioned that the company aims to optimize costs and supply chain efficiency. This implies that there are existing or potential issues within the supply chain that need to be addressed. Additionally, the company plans to build production capacity reserves and accelerate new production facilities construction, which may indicate a proactive approach to mitigate future disruptions. These developments suggest that inventory buildup and supply chain disruption are indeed concerns for the company, requiring immediate attention and action to prevent any potential losses or setbacks. That concludes the financial summary for ZCZL Industrial Technology Group Company Limited. Feel free to comment below, and I will be happy to answer them when possible.